All right, Amy, I think we can get rolling as soon as you're ready.
Okay, that sounds good. Yes, on that bright, positive note of identity theft, I'm sorry, actually, Michael, you brought that up.
It's me.
I am really excited to introduce Chad and Stacy from CFO Network to you all. CFO is based in North Little Rock. They offer, fractional CFO services to businesses just like you guys, and also those that are much larger and nonprofits, which has been my experience with them. I actually worked quite closely with Stacy for a while she was on the Arkansas Research Alliance's account. So I know firsthand that they are able to explain complex financials to those that don't have a background in finance. So I think what they provide is really valuable. And I appreciate you all so much for coming and sharing with the High Step team.
Yeah, thank you so much for having us.
Stacy, before you go too much further, you're going to have to explain why you're Stacy Parker on the presentation and you're Stacy Baker.
Yeah. So I realized as I was trying to log in that my CFO Google account, I don't use it very much because we don't use Google Meet. And it obviously has not been updated in the last 4 years since my name changed. So
she's hiding from the authorities.
It's probably related to identity theft.
Well, Stacy, do you want to get started?
Yeah, we'll go ahead and get started. Well, again, I'm Stacy Parker is actually my name. So thank you so much for having us on to do this. We're really excited. As Amy mentioned, I've been with CFO Network for quite a while. I've been here for about 16 years now. And I spent many years working with the Arkansas Research Alliance. They're one of our longest term clients. And so today, we're going to talk about accounting for new business owners, some things that you should be aware of, things that you should look for. And so we're really excited to do this. So first, if you guys would just like to introduce yourself, maybe tell us your company, what industry you're in. And I would love to know if you already have a pain point around accounting that we could go ahead and address and make sure we talk about that today. Have any takers to go first?
I'll go first. I'm Christina Johnson. I have a brand new company that's around retail data. I don't have an accounting pain point yet, but I would like to set up my accounting so I have fewer pain points.
All right, Tyrell.
Yeah, I can go next.
Go, Alex.
Yeah, sorry, I was trying to get to a spot where I could turn my camera on. But yeah, Alex, I run a company called Zenith Retail. We're in the retail industry. Probably our biggest accounting pain point is where you have to have like any economic transactions. So like, therefore we have like no accounting needs, which kind of sucks. But other than that, like, since we have no accounting, we don't have any pain from that sense. So.
Yeah, you're lucky, Alex. All right, Thomas, how about you?
Name's Tom Tesmer. I've got a couple of businesses. The one that's a part of this is a AI operational efficiency business. My pain point is the fact that I've got several LLCs that I solely own, and so I've been pretty slushy when it comes to moving money between them, as I've used money from other businesses to get this one off the ground. So at some point, I know that's going to get me in trouble.
Gotcha. Joseph. You're
Sorry,
muted.
the salad. I was salading now. I'll try not to ranch everywhere. Okay. I'm the co-founder with Tyrell Dennison, who's also on the call. We and there's actually a third co-founder as well, but he does not get to attend as many because he's got a full-time job going on the side as well. We are an AI agency as well. We're providing services for small to medium-sized businesses, specifically around facilitation, where we can educate the account leaders as well as the staff for AI and to help then implement solutions. Our biggest pain point, I don't know that there's a biggest, they're all pain points when it comes to finances, but we just had one this week of like just trying to find the right way to collect money, right? Like my wife is in anti-money laundering, so I understand the reason why it takes so long to get things where I can pay back and forth, but like just payments are not easy. And that collection is kind of difficult because then you have to either give account numbers to one person or somebody else has to give you their account number. So there's this trust issue, that whole piece right there.
Got it. That's great. That's a good one. Okay, I'm trying to find everybody else here. Let's see here. We did Alex. We did Alex, Joseph, Michael. No, not Michael. You're running the show. Tom. Did we get everybody? Did we miss anybody? We'll put it that way.
I'm up in here.
Okay.
My name's Damon. I with some other people have a company called Label. We are a group of storytellers. We're trying to do tell original stories for brands and companies and tell them in a different way. So we are set up in LA, I think, with our accounting because Christina was here and the COO. They could probably speak more to where our accounting is. I probably want to explore like the benefits of maybe being set up in Arkansas than in California, if that's a thing. You know, for me personally, I was in Dallas, so my accountants are in Dallas, so I don't know if that's something that I would need to explore as well, just to kind of have my business somewhere in Arkansas instead of like Dallas and LA.
Gotcha. Okay. All right. Do we miss anybody? I'm just scanning. I think we got everybody. I think we did.
Okay.
All right. I'll move us forward here, Stace.
All right. So some topics we wanted to talk about today are the importance of having accurate financial records, some things to consider as you're looking at setting up your accounting, whether you want to outsource that to a third party, or maybe you should hire someone internal to do the accounting, what accounting software you should look at using, some of those core accounting functions like accounts receivable and collections we'll talk about. What are some key financial reports that as a business owner you should be reviewing regularly? And then we should have some time at the end where we can go through some questions, answer some questions for you guys if you have any. Sound good?
And I'll be monitoring the chat, so if you've got anything you would feel better just to throw it in there, I'll grab it and make sure Stacy knows it's in there. But feel free to jump in at any time if you've got questions.
All right, so first, accounting, why should you care? So we know, working with a lot of business owners, they're really good at what they do, and most of the time that's not accounting. So they struggle to understand really why it's important, right? We're running the business as business owners. Why do we need to know all the daily transactions, the ins and outs on the accounting side? Well, first and foremost, without good accounting, it's really hard to make informed decisions in your business. So as you're moving forward and you're thinking about, are we growing enough that it's time we need to hire some help? Are we staying on track with the goals that we've set for revenue or for managing expenses? These types of things, it's really, I can't take credit for this analogy, but Alan Engstrom, our founder, likes to use this. Accounting, if you're flying a plane at night and you don't have any instrumentation, that's basically what it's like trying to run a business with no accounting data. So having that accurate accounting, the reporting that you need to make decisions is your instrumentation. It's also really important as you're getting off the ground, you're focused on cash flow, right? So when cash flow is tight, those accounting numbers and the reports that can be provided can really help you manage that cash flow. And if they're not accurate, it's really hard for business owners to know, okay, I logged in my bank account, I have money right now, that's great. But what do you have outstanding? What obligations do you have coming up? Do you have a lot of accounts payable that's coming due? Do you have payroll coming up in a week that you need to think about? Those types of things are where having good accounting can really help you stay on track and know where you're at. Performance tracking, we're going to talk about budget versus actuals a little later. But this is another area where it's important to have your accounting data in there so you can kind of compare how you're actually doing versus how you planned at this point in time. Legal compliance, this is really, everything from tax compliance with IRS in your states, depending upon if you plan to have, if there's any industry specific compliance that you need to worry about, things like if you plan to go public one day, making sure you're compliant with all the accounting regulations there. As you're trying to think about raising capital, whether that's by finding investors or you're out looking for loans, this is where, in our experience, we've ran into a lot with our clients in the form of they go to their bank, they're looking to get a loan, and the bank says, I need financials, and they don't have any to provide. We work with a lot of bankers, and it's hard for them to make a decision on credit lending when, maybe the best thing you can give them is a tax return that's 12 to 18 months old. So making sure you've got good, accurate, up-to-date financials really help those investors and the banks and lenders have confidence in where your business is at and be able to make quick decisions on providing financing. And then also, fraud prevention and internal controls. I know small businesses, it's kind of typical to think it won't happen to me, but it sounds like some of you guys are aware that it probably can and will at some point happen. And so making sure you're keeping up with your financial data really helps flag any fraud that happens quickly, so it can be addressed before it's gotten to a point where it's too late. And we've had some cases of this with clients we work with where unfortunately is small businesses, and they have had in some cases tens of thousands of dollars that they've lost because they weren't keeping up with their accounting data. And then last but not least, valuation and exit strategy. So some of you, as you're just getting started, maybe you haven't even considered this. Maybe some of you have. You want to end up on this journey. But again, making sure you've got your accounting data for evaluations, is maybe you're looking to exit the business, sell the business, get acquired, things like that.
So Stacey, we got a couple of questions in the chat. One was from Tom, and it was around budgeting. Tom, do you want to maybe drill down on that a little bit?
Definitely. Don't need to hijack it now, but advice recently given to me was from more of a sales standpoint. Depending on how I position my service, it could be funded through either a CapEx or an OpEx budget, and that could have a big impact on how a client has the money available or how they can justify it or things like that. So again, don't need to hijack the conversation now if it's not appropriate, but would love to learn more about that from you guys at some point.
Okay. All right. We'll put that in the parking lot. And then Amy, do you want to speak to your point?
I also don't want to hijack it now. It might be part of Stacey's presentation, but I've heard people say our margins are amazing, not really taking into account, the value of their time. And if someone were to buy their company, they would have to replicate having a founder that spends time on the business. So there is a cost associated with that.
Yeah. Yep. We can certainly help with that. Okay. We'll keep those two going. Stacey, you good to move forward?
Yeah, let's go ahead and move forward.
Okay. I get this to work. Here we go.
So here I wanted to talk about, as you're considering setting up your accounting, what are some things that you should consider? Is it better to outsource it to a third party? Should you consider hiring someone internally to handle it? And so there's pros and cons to each of these, of course. One of the biggest ones, especially as businesses are starting out, is the cost of accounting services. And so for an internal hire, and we've seen this many times, it's really hard to find one person who can come in and do everything from top to bottom. You might find somebody that's really great at making sure the bills are paid and the banks are reconciled, but they're not so great at the higher level accounting piece, or vice versa. You've got somebody who's really good at looking at a high level, more of a strategic thinker, but they're not good at getting down in the weeds of the accounting. And so when you get into that position, if you have to hire multiple people, salaries can get expensive. That's a lot of overhead. Whereas if you're able to outsource, you can fractionalize and get a piece of each person's time. And so you're not having to pay, a full-time salary when really probably, at least initially, the accounting workload is not going to be a huge lift. Next thing to consider is their expertise. So again, it's hard to find one individual who kind of checks all the boxes that you need. We call those unicorns when you can find one. And so if you outsource, typically companies have very specialized skill sets and a knowledge base. And so you're able to really get the team knowledge when you're really only paying for a fraction of the service. Scalability, again, as your companies grow, if you're outsourcing, it's typically easier. They can grow with you, so they can dial back if need be on the time spent, or they can dial it up if need be. And it's usually much quicker than if you find yourself needing to go out and hire an additional resource. It takes time to find those resources. Control, again, this is something, as you're looking at your internal controls, fraud prevention, you could find yourself in a situation where if you are outsourcing, maybe you have a little less direct control over the processes that your accounting provider is using. So definitely you would want to ask some questions around what controls they do have in place, what practices they follow to make sure that they are meeting your requirements. Whereas if you have an internal person, you're obviously going to be working very closely with them and have really full control over the processes that they're following. Availability, if you have a person sitting in your office, whether that's in person or virtual, that's going to be dedicated to you, they will be able to provide reporting and answer questions immediately. Whereas if you're outsourcing, typically, they're going to be working on multiple clients, so there may be some delays. I'm sure every company has their own policy on time frame for responding to clients. So that's a question to ask, what their policy is on communication timelines. Security, again, if you're outsourcing, there can be some additional security concerns here. If you're working with third parties, you don't have as much control over maybe some of the systems or the processes that they're utilizing. Whereas with an internal hire, you can make sure that they're following the processes that you're comfortable with and that everything's being handled in a more secure way. And then familiarity with your business. So turnover, right? If you're working with an outsourced company, they're not there to witness the day-to-day goings on. So maybe they're not quite as able to fully understand your business as someone who's there day-to-day working in the operations. But then another consideration is if you have somebody leave, you have to replace that hire internally, versus if your outsourced provider has any turnover, they're able to backfill that position much more quickly. Any questions on that? That's really some of the things that as as you're exploring this, or questions that we would want you to ask or things that we would want you to look at as you're making those decisions.
Stacey, I'd love to jump in here and ask a question. In our experience, and there may be some vocabulary and you may be getting into some of this, but in our experience at Rev Unit, we struggled in those early days of wanting strategic input and only getting someone who was preparing reports and telling us, like helping us read those reports. And we would kind of then ask well, what should we do? And there was very little of that provided. And that was a struggle even as we moved through different partners. So when I think and then we were 4 years in before we made our first financial hire. And that individual who just his buy-in with the business was so much more than the outsourced partner. So my question to you was that not that I'm asking you to rag on other people that didn't do it well, but is that a symptom of outsourcing, or is that a symptom of just not having the right, norms established with that partner? Is that an expectation? Should these individuals should our companies be able to expect a level of strategic input and forward looking from an outsourced partner?
Absolutely. So again, that's really kind of that unicorn that I'm talking about. If they can do both of those things at the same time, then you found a unicorn. But it is much more common where you either have someone who's really good at the day-to-day, the reporting, making sure your transactions are booked in there, or you have a high-level thinker who, as you're thinking through future business moves, they can help you with that process. And so for outsourcing, your best bet is if they have a team of people, and this is kind of how we're structured. We have accountants who are really great at accounting, the day-to-day, recording your transactions, making sure the financial statements are accurate, producing the reports. And then you can also fractionalize CFO level services. And so they're going to be the ones that work with you to analyze the financial statements. They know what your goals are for the company, and they can help you identify areas where you're on track, maybe you're off track. We need to put some focus here, and help with more of that high level strategic thinking. So if you're going to internally hire and you want both of those, you can find them. They're out there, but it is a little bit more difficult. Versus if you're outsourcing, you want to make sure that whoever you're working with, they either have someone who can do both of those things, or they're able to structure the agreement to where you have, a couple of different people supporting you, so you're getting everything that you need.
One of the phrases that we use, and I'm learning this, didn't grow up in this industry though, is there's accounting and then there's finance, right? So if you're looking at, if you go out there, there's other people that do what we do. Just make sure if you're really wanting that kind of casting forward, you find finance, strategic finance, that kind of terminology. A lot of people, when they think of CFO, a lot of people think, oh, that's an accountant. And in some instances they are, but for a lot of outsourced firms, they'll have a finance group that'll have that CFO piece, and they'll distinguish accounting from finance.
Yeah, it was definitely a learning for me. I went in expecting the accounting side to be able to give that input, and it took a long time to understand. I think the worst part is I didn't even know what we were missing until we actually brought someone in who did have that finance side and realized how much we were missing out on prior to that. So it's good that you guys are sharing all this now.
And if you're in a situation where your books are okay, but you really want the strategic part of it, that's probably not going to work either, right? You got to have that good foundational accounting. That's your bread and butter. Then use those numbers to cast forward. Ooh, yeah. Tom's got a question. We'll hold that one to the end, because I was sort of interested in that, Tom, when you mentioned what you guys do. We may want to have a discussion with you as well. Tom, we'll address that at the Q&A at the bottom. I think that'd be great. Stacey, you ready to move?
Yep, we can move to the next one.
All right, let's see here. There we go.
So this is an example. This is kind of a classic structure of an accounting department. So when a company gets large enough that they're able to have all of the support that they need for the various accounting functions and maintain those separation of duties for fraud prevention, this is a classic example of what that would look like. And so you can see here, most small businesses, they can't afford to hire all of these positions. And so this is where, outsourcing is a nice option, because instead of paying for all of these people, maybe you only need someone, an hour a week to handle your accounts payable. So you only have to pay for that hour a week. You can get your senior accountant and controller level, the higher level accounting support as well, instead of having to pay a controller salary and they're over there, writing checks and reconciling the bank account. So this is just kind of a classic structure. We want to just kind of show you an example of, larger companies, what they would expect to have internally. And if any of your companies, if you plan to get to the point where you require an annual audit, this is a really classic structure that auditors like to see. They like to see that you're maintaining separation of duties and you've got internal controls in place, instead of, you got one person that's opening the mail and taking the checks to the bank type situation.
Stacy, maybe if you've got one or two stories that you could tell about the lack of having that segregation of duties and oversight that maybe you've seen that are common, that just kind of cautionary tales for folks as they're getting started.
Yeah, I mean, typically what we see a lot from our small business owners is they do have one person who's sitting in their office really performing all of the accounting functions. And unfortunately, we've seen some situations where that person has worked there for 20 years and they are considered family. And the business owner has no idea that they're stealing money from them. We've seen that more than once, unfortunately. So again, that's, kind of the risk of having just one person in that seat. No matter how much you feel like you can trust them, if there's no one looking over their shoulder, it is a risk that you're taking. And so having a setup like this, or at least a review of the work that person is doing, is really critical.
So is there a tactic or strategy, one or two, that, let's say they're in that situation now, they've got one person doing everything, something that they could do that may mitigate some of their risk, instead, if they really want to keep that person but need to kind of try to figure out ways to lessen their risk of any kind of mismanagement?
Yeah, so at a minimum, even if you've got someone who is reconciling your bank accounts, or reconciling credit card statements, if you're using credit cards in your business, you really need to lay eyes on those monthly, just to make sure that there's not charges or things clearing the bank account that don't look right, or that you don't know what they are. Also, as if payments are coming in the door, you want to make sure that you're keeping an eye on your accounts receivable, that payments are getting applied to your customers regularly. Things like that are some small things that you can do just to kind of keep an eye on things to see if anything looks off.
Alex has got his hand raised.
Yeah, I just had a question. What, from an accounting point of view for like a small business, what should the founders do? Should they invoice directly, or what should they outsource? I come from a background where, Jeff Bezos says, like, brew what makes your beer taste better. And I've always heard that in reference to, like, let the accounting people just do all the accounting and you handle like more of the business and operation side. So like, where would you recommend, like, for somebody like myself as a founder who does come from an accounting background, like, where would I outsource the work for y'all to take?
Yeah, so I mean, as an owner, you kind of have to think about, even if you have the background and the knowledge to do those daily accounting functions, is that really time well spent for you? Or your time's probably more valuable going out and working on the business, right? And so having someone do the billing, the applying the payments to the billing, making sure they've got a list of all the bills that need to be paid, doing those bank reconciliations. Those are things that typically it's not worth an owner's time to sit there and do all of those functions. And so what I would say is if you have someone doing that, that's great. Just keep an eye on things like review the bank reconciliations that they're performing. Make sure that they, one, are doing them, and two, that if there's something odd that sticks out on there as a transaction, that you look into that. Make sure you're reviewing again, your billing and the payments that are coming in. If you've got, clients who typically pay on time and then suddenly it looks like there's a 30-day lag, I would check into that. That's typically where we see cases of a payment have come in the door, but it was routed, to somewhere else, and payments are not getting applied the way that they should. So I would just, I do highly recommend that if you can, don't do the day-to-day of the accounting, but at least do a monthly review on some of the major items.
Yep. And Alex, for us anyway, if you said, hey, I need you guys to do what Stacy recommended, that's the least expensive thing, right? So you could sort of outsource that part that's the least expensive, and you can have the oversight, which would be more expensive if you outsourced it. So maybe just get an ROI perspective. Tom's got a question about credit card points and using, purchasing through the business, but then using the points potentially for a personal use.
So as accountants, we discourage commingling business and personal. But of course, we see a lot of business owners that do. So I would highly recommend that you do try to at least keep all of the purchases on a business level. But if you're not, again, you need to make sure that you're being really clear in the accounting what is a business expense and what is a personal expense, because they do need to be accounted for separately. And come time for taxes, tax accountants love if that separation has already been kept and they know how to handle that, versus they have to spend, hours upon hours to do it on the back end to file the tax returns.
Stacy, what about if I have $1 million of spend on my Amex Platinum, and then I take those million membership reward points and take my family to Tahiti? My understanding is that points, though all those different point systems are not a taxable thing at this point, and so there's a lot of fluffiness with how you use those. Is that correct? Or do my business earned rewards through my credit card have to be spent on the business?
As far as the tax consequences, I'm not certain if there's tax consequences to spending them personally, or if they have to be spent on the business. We do see it pretty regularly where people are using points for trips, but typically we're counting those if they're a personal trip. We're seeing, I took my computer, I have my phone with me, I'm working while I'm on vacation, so it's a work trip. And so that's how we're accounting for that. As far as the tax consequences, though, I'm not sure about that.
I think Michael's got a question or comment.
Yeah, I'll comment on the last two things. So one on that issue, Tom. I'll speak to this as someone who was looking at acquiring other businesses and just share a direct example. We ran into a situation where we were looking at a company, but part of that company, the husband and wife owned the building that the business was running in, and they had some weird intermingling of those sorts of things. And while that was probably all on the up and up and handled, when we looked at that as a potential acquisition, it was too much for us to want to unwind and figure out what was what. And so again, that was just a personal experience. They have a lot more experience with this, but we looked And as a business that we were building, intending to sell at some point, we took very seriously the piercing of the corporate veil. I mean, I remember at one point I realized, and this is really dumb, but I realized I'd gotten the wrong PayPal account or something, and RevUnit had been paying for my Netflix for like 2 years. It's like, oh my gosh, I call up my account. I'm like, am I going to jail? What's happening here? But we took that stuff very seriously because we wanted the business to truly be its own entity that was able to be picked up. And now I always was slightly irritated when my buddies at the end of the year would go, like, everybody was buying trucks. All my friends that were also business owners were all buying work trucks in December every year. Like, wait a second, how does that work? When do I get that? But it was just a different philosophical approach, or at least that we chose to take, of we're going to run our business truly as its own entity. So we were very, very serious about not mixing anything. Alex, I'll go back to your thing. Just one comment there. You asked specifically about invoicing. My only addition to what Chad and Stacy said is invoicing is part of your customer experience. That is something I would want to be extremely hands-on with until you have confidence that you can convey to even an internal person or your outsourced partner what you want that to look like. So, I mean, example, you don't want some invoice going out the door that doesn't clearly articulate what you're billing the client for, if you know that client is very meticulous about reviewing their invoices. So you want to get that right and understand what that looks like. So just, I would be pretty more hands-on with anything that touches the customer.
Thank
I'll
you,
be quiet
Michael.
now. Thanks.
I just want to comment on Tom's from a tax perspective, like the way that I think if you ever needed to position it to the IRS tax or to the IRS, Tom, would you just say, the credit card has the membership points, which are an asset for the business. And since you're the agent or sole proprietor or however you position it, like that's just a benefit that you get as a employee of the quote unquote company. That way it could still be a quote unquote business expense where you just pay yourself with a vacation trip. So you could position it pretty well if I were arguing in your case through the IRS.
Agreed. And if you made some documentation and put it back behind that, then you have a gap practice behind it that says that you do that. So.
Stacey, you ready to move forward?
Yep, we can go on to the next one.
Yep.
All right, so choosing the right accounting software, there's a lot of options out there for this, but some things to consider as you're going through that process. Of course, number one is cost. There are some pretty inexpensive options. There's even some free options out there if you're doing very, very basic accounting. And then there's systems that are very expensive. And so as you're evaluating which system you want to go with, some things to consider. Some of these systems are a one-time setup cost, and then you own the software. But a lot of these systems also have a monthly subscription cost. QuickBooks is one that we work in a lot. I don't know if you all are familiar with QuickBooks, but they have different subscription levels that you can use. They're more basic ones, pretty inexpensive. I think it's $100 a month or less. But it is a nice option because as your company grows, maybe you become more complex, you need to add more users to the system. If you need to, you can bump up to the next price level, but still stay within the same software and you have all of your data. You also need to think about things, what features are you going to need? So if you're in an area where you have to collect sales tax, you need to make sure that they've got a good sales tax feature. If you're going to be running payroll through your accounting software, you need to think about what options they have there. Really probably all of the basics are going to be covered as far as your accounts payable, your accounts receivable, bank reconciliations, and just about anything that you would look at. But then think about, do you have any other systems, whether it's, your customer relationship management system or something like that, that you want to, maybe you have a POS system that you want to connect to your accounting software. Are those connections available? Some things like that that you would want to consider. Ease of use. Is it user friendly? Does it have workflows that you can build into the system? Are you able to set up rules for the system? So this is one that we like to use a lot within QuickBooks. If you've got expenses that are recurring from month to month, you can set up rules in the system to where it will automatically post and code those, so you're not having to spend any time manually entering those transactions every month. If you are using the system to pay bills directly to your vendors, what does that interface look like? Are you able to cut checks from the system? Are you able to do them electronically? Same thing with payments coming in, or are they able to send payments to the system electronically? Or are you having to find another resource for collecting payments and getting those into your accounting system? Scalability. Is the software going to be able to grow with you? Some of these, really, the free or really inexpensive options are nice in the beginning. But you can pretty quickly outgrow them, and then you have to go through a system change, which those are never fun. We've done a lot of system conversions, and those can be a little messy. They can be a big lift to have to go through that change. And so if you're able to find an option that can grow with you as your business grows, that's something to consider as well. And I kind of already mentioned the integrations, but just what other tools are you using in the business that would be beneficial to be able to connect to your accounting software, so that you're able to push information from one system to the other? And then the support. So what is the quality of their customer service, the availability? Is it a system where you can put in a phone call and somebody's going to be able to help you with your issue, or do you have to submit a ticket? What is their response time to tickets? Things like that are all things to consider as you're assessing your software solution.
Any questions for Stacy around this? I know this is sometimes a hot topic, like where do I go? We, just to give you some context, we do a lot of work in QuickBooks. A lot of people are trained on QuickBooks, right? So it's sort of ubiquitous as it relates to if you were going to, start outsource and then bring somebody internal. Finding people that know QuickBooks is fairly easy compared to some of the other ones. And they've done a great job on their QuickBooks Online to make it a more robust system and more APIs for plugins for all those other systems out there, point of sale or that sort of thing. So, but we see them all, and happy to, when we get done with this, we'll send the presentation over. If you've got, a system that you're looking at, we're happy to kind of give you an idea from our perspective what we think about them. All right, I'll move on to the next one.
All right, so these are some of just the core accounting functions that you want to think about, make sure you have a plan for. So the first one, your accounts payable, making sure that you're tracking all of your unpaid bills, that you're managing your payments that are outgoing, managing your cash flow. Nothing's really worse for a small business owner that's tied on cash than to not realize really what their liabilities are and what all they owe to their vendors, and then get surprised when they get a large bill. On the other side of that, accounts receivable. So of course, managing your collections, making sure you've got that money coming in the door is vital. So just making sure that you're invoicing your customers, you're maintaining those good customer relationships. You've got a system in place for your collections and following up on payments if they're not made timely. Reviewing accounts receivable balances on a regular basis to help you manage your cash flow. Your reconciliations, so making sure you're reconciling all of your bank accounts, your credit card statements, making sure you've got all of those transactions in the system so you have a good picture of what your money coming in and out actually looks like. If you have payroll, making sure you're reconciling your payroll liabilities, making sure all of your tax payments are being made timely. If you have any investment accounts at any point, making sure you're keeping an eye on those and they're getting reconciled as well. Payroll, if you have payroll, making sure that you're calculating your wages appropriately, managing your tax withholdings, your tax filings. If you offer benefits, making sure that those are, getting collected and paid into 401k or health insurance, whatever it may be that you have. Budgeting. So we're big on doing an annual budget. We really believe in those, and then using a comparison to your actuals to help analyze your financial trends, know where you're on track, know where you're off track. That's something that you should be reviewing regularly. And then your reporting. So we're going to talk about these next, but there's a few main reports, financial reports that you should be looking at. But then also considering what other management type reports you need. If you're needing reporting on, any KPIs or any other type of tools that you need to run the business. Your financial reports, are you going to do your accounting on a cash basis or an accrual basis? Those are all decisions that you should think about when you're looking at your reporting. And then, lastly, your tax compliance, making sure that you're preparing and filing any and all tax returns, and then, any that are specific to maybe your state or your industry, that you're in compliance with those as well.
Awesome. Any questions? I know we're kind of getting short on time, so I'll move us forward and then we can put anything in the parking lot we need to. How about that? There you go.
All right, so these are the key financial reports, for your company, your balance sheet. So this is going to be a snapshot, of really where you're sitting at any point in time as far as the company's assets, liabilities, and equities. As bean counters, as we're referred to, this is the report that we really focus on. It can tell us a lot about the business. I know for some business owners, and this is not the most important, they really like to focus on that income statement, which is the next one. So that's going to be over the period of time. It's going to show you your revenues, your cost of goods sold, your expenses, overhead, those types of things. And that's, going to tell you if you're having a profit, if you're having losses, those types of things. And so that's typically where we find small business owners like to focus their time. They like to see, what their sales are, what their revenue is, and then what their expenses are to get to that bottom line. Statement of cash flows. So this one's really going to detail out how the cash is flowing in and out of the business. This gets broken down into your operating activities, which are going to be, your daily functions, your accounts receivable, your expenses, all of those things, any investing activities that you might have, or your financing categories that you have. And this one's really used to help provide visibility into your cash management, your liquidity, what your flexibility is on your finances, those types of things. And then the fourth one that I really think every business owner should be using is that budget versus actual report that I mentioned before. And so this is going to be the report where if you're putting together an annual budget, you can then plug in your actual numbers and see where you're on track, where are you off track. We have variances here. This is an area that we really need to focus on. We're spending way more than we thought we would, or our sales are not near as high as we thought they would be at this point. It really helps highlight some of the areas in the business that are maybe not following the trends that you expected them to follow.
And one key point here that we talk to all of our prospective clients about is if you don't trust those numbers, you don't trust what's in those reports, you're not going to do anything with it, right? You got 1,000 decisions you're making a day. And if you look at it and you go, I don't trust that, you're not going to make a decision there. So it's imperative that really good accounting, you can see it and you trust that number, and then you know where to go to what to attack. And to get those numbers on a regular basis. We talked to a lot of folks who say, well, I really want to get those reports quarterly. I really don't use them. And it's not going to be much use to you on a quarterly basis. You really need to be looking at this stuff at least monthly to help you drive, success. Okay, I'm going to advance this. I think the next thing is Q&A. I know we're running short on time. There were a couple things in the chat, Stacy. I'm going to go in reverse order. The one I just saw was, can you talk a little bit about maybe the pros and cons of outsourcing on an offshore basis, offshoring your accounting to an outsourced group that's maybe somewhere else outside of the U.S.?
Yeah. So typically that is going to be a less expensive option to outsource offshore. Some of the things that we've heard and seen from our clients that have done that in the past is the communication. So whether there's a communication barrier or it's the timing and responsiveness issue. So a business owner, needs something pretty quickly, and knowing they're probably not going to get it for another 8 to 12 hours. Things like that are some of the things that I would say to be aware of, is that typically the responsiveness to needs is not great, but it is typically more of a budget friendly option.
The other thing to look out for is are the people that are working for this outsourced firm, are they 1099s, are they W-2s? Are they working for that company, or are they a contractor? And sometimes that can help you a little bit know that they're really investing in these folks that are doing your accounting for you. So Tom had an interesting question. I know we've got one more, but Tom had an interesting question around AI. And I don't want to take words out of Tom's mouth, but he was asking like how to utilize AI in those accounting functions. I don't know if maybe you could talk a little bit about some things you've seen over the last few years, maybe things we're utilizing that incorporate AI into them, that streamline accounting on our end. And then maybe there's some things you've seen that maybe business owners can use.
Yeah, I think one of the biggest things that we've seen personally with AI, and so for all of the clients that we handle their accounts payable, we use a system called Bill, used to be bill.com, if any of you are familiar with that. I believe QuickBooks Online is implementing or has recently implemented something similar. But it's an AI software that helps to, if you upload a copy of an invoice, it will read that and it will code it for you and give you all of the financial information that you would normally have to enter when you're entering a bill. And so that cuts down on processing time for us. Again, I would say a lot of the other things that I've seen are probably around coding of transactions. The ability to get transactions into the system without having to manually enter them are a lot of the technologies that we've seen on the accounting side with AI.
And we're always interested in learning more. If y'all have seen some tools that are effective, we're always trying to drive down time, drive up efficiencies in that realm. The next question that Alex brought up, budgeting for volatile revenue. And Alex, if you wouldn't mind maybe kind of coloring that in a little bit for Stacy.
Yeah, just revenue that's hard to forecast. So a lot of times I've seen budgets with smaller companies. You usually budget your revenues in a sales cycle that might fall through. And sometimes you spend expecting that you're going to have all those revenues and then you don't. So like the revenues is the top line, and that kind of determines everything below the quote unquote line. So like, how would you recommend ensuring that your revenues, when there's a lot of volatility, is accurate and you can make sure your spending and your plan is strong?
Yeah. So, I would say my best advice, and we kind of have our finance department really runs the budgeting part of what we do for our clients. So I'm sure they could give you a lot more color to this. But you know, if you know that revenues are going to be volatile, or in a lot of our clients' cases, they have seasonal revenues. And so they will do their expense budget in line with that as best they can. But keeping in mind the things that, what do we absolutely have to have as expenses to run the business? And then thinking about the things that, well, we could delay these expenses until we know how this revenue is going to shake out, and building their budget and their timing of those things around that. And of course, what we experience a lot is we do plan for things, and then we get halfway through the year, and a client's their main customer that they thought they were going to onboard has suddenly ghosted them and cut ties. And so now they're not going to get that revenue that they were planning on. And so they would sit down and have to kind of go back to the drawing board a little bit and say, okay, here's what we were planning on expense-wise for the rest of the year. How can we adjust? What can we cut? What changes can we make to make sure that we stay in line with where we need to be until we can get those revenues back to a place where they need to be. Budgeting is very hard when you have a lot of volatility, or you're starting out and you don't have a clear line of sight onto what your revenue and collection cycle is going to be.
And we would be happy to have one of our CFOs come in and sit down and kind of talk about a few of these things, right? Forecasting and maybe some tips and tricks around that. But we do a lot of that work for our clients, these very sorts of issues, and they are tough to do, especially if you don't have a whole lot of history to lean on. But we've got some strategies we can employ there. I know we're running along. I'm going to get the commercial in here real quick. So this is and I'll send this out so that y'all got it, but this is the scope of work that we offer to our clients. So Stacy's obviously done the outsourced accounting, but we do have, as we were just talking about, that financial analysis and reporting piece that is really helpful for folks. You can see it right there: budgeting, planning, benchmarking, any sort of data system that you've got. We've got really talented analysts who can pull that data out and then help incorporate that in. So if you got operational data, we can help you with that, as well as your financial data. Business process improvement, that's always a good one. And then that valuation and strategic analysis is just really helping you look at your opportunities and what may be the best thing for you. So we've got those services. My information's down there at the bottom. Again, we would love to have an opportunity. We can have one of our CFOs come in and talk to you about some of that kind of finance strategy stuff. But you guys are great. We appreciate the opportunity to meet with you today.
Chad, Stacy, thank you both. Super helpful. And we do, I mean, some of our cohort companies actually have some budget provided by the High Step program for accounting support. So it is likely that you will hear from one or more of the folks on this call, and Amy and I will hit you back up if it makes sense to come back for another round 2 at some point.
Wonderful. And just so that y'all know, we do a full discovery process and give you a scope of work and pricing for no cost. So if you just want to price it and see what it's going to look like to get what you need, we're happy to do that. It gives us a chance to meet y'all, know more about your business, even if you aren't quite ready to bring somebody like us on.
Awesome. Thank you guys. Chad, Stacy, appreciate it. High Step folks.
Thank you, Chad and Stacy.
Catch you next time.
See y'all. Thanks, Stacy.
We'll see you.